Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about one of my favorite projects that I've been looking at for quite some time. And this project is called the Benchmark Protocol or the Mark token, right? Again, as always guys, I highly recommend you guys to do your own research on any of the projects that we cover in our channel. And for this project, I highly recommend you guys to go to their website benchmarkprotocol.finance in order to learn more about their project, right? So what is Benchmark Protocol? So Benchmark Protocol is an elastic stablecoin alternative bridging capital markets to DeFi, right? So if you guys don't know elastic stablecoin concept, it's basically it basically originated from this cryptocurrency called Ampleforth or Ample token to be specific. And if you guys take any cryptocurrency, a stable coin, they are either pegged to the US dollar or any particular currency or any particular real life stable currency like euro, Australian dollars, Canadian dollars, American dollars or whatever, right? And they are basically pegged to the price of the actual currency through either algorithmically or non-algorithmically, right? So what do I mean by that? They can either be pegged to the price of a US dollar based on backing of an actual US dollar to mint a stable coin. Let's say for example, if you take USDC for example, USDC is a stable coin backed by $1 for every USDC coin, right? So it's a very popular stable coin for USD, and it's been extremely audited and highly regulated to such an extent that every single USDC in existence is backed by a US dollar behind the one USDC coin, right? So when it comes to Tether, for example, Tether works a little bit differently. They've also been a part of a big controversy where they are not necessarily backed by a US dollar, but they are backed by assets or properties or commodities that are basically worth $1, right? If you take DAI stablecoin, for example, DAI works a little bit differently because there is something backing it, but it's not necessarily US dollar. It's actually the ERC20 cryptocurrency tokens that are used as collateral in order to mint DAI, which basically forms this $1 stable coin that's used in DeFi applications, right? So similarly, there are multiple different versions of stable coins, and one version of stable coin is an elastic stable coin that basically pegs itself to a US dollar of $1, and if the trading volume for that particular cryptocurrency increases, then more people buy the stable coin that basically makes its peg go above a US dollar because of the buy side pressure. And in order to prevent the peg from being depegged, the stable coin algorithmically issues more of itself, which means more of this stable coin is printed by the protocol, thereby diluting the supply and bringing the price back to the $1 peg, right? This is also the case when it comes to the opposite, when there's a lot of sell side pressure. The price of this stable coin can go below $1, and in that case the algorithm automatically decreases supply, ensuring that the stable coin peg is back to $1, right? So this is how the popular elastic stable coin Ampleforth or Ample token basically works. And since Ampleforth's debut, there's been so many cryptocurrency based projects that have tried to copy the model of Ampleforth, but instead of pegging to $1, they have pegged their value to the market cap of cryptocurrency in general, or even to the price of Bitcoin, and so on and so forth. They've become creative with the stable coin kind of feature, right? So one of those kind of tokens that has basically tried to replicate the success of Ampleforth is Benchmark Protocol. But in my opinion, I think Benchmark Protocol is in many ways not only different but also slightly better than Ampleforth itself, right? So Benchmark Protocol offers this stable coin called Mark token, which also is an elastic supply token, which means depending on whatever it is pegged to, which we'll discuss in a short moment, the Mark token price can either be increased by the program or even decreased by the program, but your total share of the network continues to remain the same, right? So if you guys still didn't really understand what I was trying to tell you about, you can watch this very informative video on their website. I highly recommend people to watch this video because it's a very well produced video that explains what a benchmark protocol is and what the Mark token and how the Mark token actually works. It's a very short kind of 3 minutes video which I highly recommend people to watch in order to kind of get a bird's eye view of what this project is, right? So global impact, the Mark token augments supply based on the special drawing rights or SDR. So if you guys want to know what the benchmark protocol or the Mark token of benchmark protocol is basically pegged to, it is basically pegged to the special drawing rights, okay? And what the special drawing rights or SDR is basically a composite international reserve asset comprised of the US dollar, euro, Great British pound, Chinese yuan and Japanese yen, and it's basically a combination of the five currencies, five most popular currencies in the real world, which is USD, euro, Great British pound, Chinese yuan as well as Japanese yen, right? So instead of all crypto, like all the elastic stable coins kind of like trying to peg to the US dollar or the euro or Great British pound, benchmark protocol goes one step further and has a value that is representative of the five most popular currencies, real life currencies in the real world, and this basic composite represents the SDR or special drawing rights value, right? This is I think a dollar 40, which is basically the value, and that's the target price for each Mark token, right? And whenever there's buy side pressure, the Mark token kind of tends to go out of this peg, whereby it's worth $1.60 or $1.80 or something like that, instead of being at its $1.40 range, and that kind of automatically triggers a rebase event, which the protocol prints more Mark tokens and dilutes the supply with an attempt to bring down the price to the peg of $1.40, right? And again, in the converse, if the Mark token is being sold way more aggressively with a high sell side pressure, the Mark price point may be lower than $1.40. Let's say it may be $1.20 or $1 or whatever, right? And that automatically triggers another rebasing event, thereby kind of like removing more Mark tokens from the market during the process called rebasing, that kind of pushes the price back to the $1.40 range, right? Again, if you guys feel like that's very confusing, to some people it might. If you are new to the concept of rebasing and elastic stable coins, then I highly recommend you guys to click this link, read more about the STR. Here, this blue button here kind of like provides you more information about what this STR is and how that impacts the target price point of the Mark tokens, right? So yeah, so if you see here, they have kind of like a pictorial representation of all the major currencies that are being used to determine the STR value, and again the five strong currencies in the global economy. So if you see the STR breakdown is basically like you have a higher pool of USD, Again, the next currency is basically euros, and then Chinese yuan, Japanese yen, and Great British pound. So it's basically a composite mixture of these 5 currencies that forms the SDR, right? And uncorrelated asset, again, being pegged to like a value that is a composite of these 5 currencies, this cryptocurrency is basically uncorrelated with bitcoins, right? So what do I mean by that? So if you take any cryptocurrency or majority of the cryptocurrency in the market right now, most of them are actually correlated directly with Bitcoin, which means if Bitcoin goes up, they go up simultaneously, and if Bitcoin goes down, they go down simultaneously, right? So by being correlated with Bitcoin, if Bitcoin's price becomes manipulated, or if Bitcoin's price kind of tanks for a period of time, all the other cryptocurrencies also tank, or they themselves are subject to vulnerabilities because of being directly correlated with Bitcoin, right? And that poses a lot of problems to investors who want to invest in an asset that is uncorrelated, because if you take the COVID-19 pandemic, for example, when people started realizing that the pandemic was beginning, they started selling their investments, including stocks as well as cryptocurrencies, which kind of tanked the price of Bitcoin and made Bitcoin crash. And since Bitcoin crashed, every other cryptocurrency that's directly correlated with Bitcoin, which is pretty much most of the cryptocurrencies, also crashed, thereby causing this chaos and panic with a lot of uncertainty, right? But benchmark protocol, or a mark token, is completely uncorrelated because it is independent of the price movements of the other cryptocurrencies, including Bitcoin, right? Which is a very positive thing if you are looking to buy an asset that must be diversified and does not need to be correlated with other cryptocurrencies, right? Collateral needs liquidity. The benchmark token or mark token is a supply elastic collateral utility designed to inject liquidity during periods of high volatility in correlation with global equities markets, right? So whenever again the peg of the mark token becomes over or below the SDR, sorry, I believe it's SDR value, then it kind of reacts elastically by increasing or decreasing the supply in proportion to how far it is above or below the SDR value, right? And this kind of provides a utility for it to be like used in several decentralized applications. So liquidity needs collateral. When the mark token reaches the yield phase, the network is capitalized and utilized to assume quasi steady state conditions. The implied value of the mark token is its yield bearing value arising from its collateral utility, right? So what they're basically trying to tell here is basically whenever the mark token reaches the yield phase, which is basically, again, the yield phase is something that is referred to when it comes to rebasing. The network is capitalized and utilized to assume quasi steady state conditions. Again, if you really don't understand that, all you need to understand is basically the network kind of reacts algorithmically in order to provide issue more mark tokens or remove more mark tokens in a quasi steady state condition. The implied value of the mark token is its yield bearing value arising from its collateral utility, right? So again, pretty straightforward explanation. Non-dilutive, your network share. Holders of mark tokens always maintain their equity stake or share of the network in the benchmark protocol, no matter what conditions strike the markets. So again, similar to many other rebasing currencies, mark token holders, let's say if you hold 10 mark tokens, you are basically holding the same share of the network regardless of the rebasing criteria. Again, depending on how many tokens you hold and how much network share of the network share you hold for the benchmark protocol by holding the mark tokens, irrespective of whether the rebase is positive or negative, you will still continue to hold the same network share that you held before, right? So again, that is really cool. The enterprise benchmark protocol network exposure is always non-dilutive. So again, you may think that by the protocol issuing new mark tokens or removing the mark tokens due to positive or negative rebases, you are basically being diluted, but that's not the case. In the benchmark protocol, you always the only thing that's constant is your non-dilutive nature, right? You will continue to be holding the same network share that you held before the rebase, but the only thing is the token rebasing mechanism kind of like tries to do that in order to achieve the same peg of the STR as before. Consequently, it kind of like causes fluctuations in the amount of mark tokens you may hold in your wallet. So if you hold 10 mark tokens, during a positive rebase, you may have 11 or 12 mark tokens depending on how far away is the token pegged from the STR value. And in a negative rebase, you may probably have 9 or 8 mark tokens, but you still continue to hold the same network share, right? So that's pretty cool. Again, they have some really cool graphics, and again, they are a very highly secure network that is audited by Certic, which is one of the most popular names in the cryptocurrency auditing space. The benchmark protocol smart contract has been audited by Certic. So again, you can find the audit report here by clicking the view here button. It's secured. We incentivize researchers with bug bounties to audit our software. So again, they are constantly trying to identify bugs and make sure that all the bugs are kind of like identified by specialized people, tested. Our software is routinely tested with the help of the developer community. So again, they have a very active community, and they have some really smart people backing this project who kind of constantly test this project to identify any potential issues, right? Partners and collaborators. So some of the partners and collaborators are also mentioned here. So one of the partners is Innovo, and then you can also see Balancer being one of their partners, Harmony, SushiSwap, Argent Wallet, and Golem, which is another cryptocurrency, Uniswap, Ocean Protocol, Dodo, which is a decentralized exchange, PancakeSwap, again decentralized exchange on Binance Smart Chain, OneChain, XDAI Stake, second layer solution, Polygon, a side chain, Fortube, again a Binance Smart Chain player, Elastos, Solana, Ren Alliance, Torque, as well as again I think I accidentally clicked that one. So again, if you see Fulcrum, which is a BZX project, Digifox Finance, again it's another wallet, Certic, again, and so again some really cool partners and collaborators whom Benchmark Protocol is basically like partnered with in order to kind of improve on its project, as well as seek some guidance and work with several projects in order to integrate itself to the projects. Again, the main goal of Benchmark Protocol is to kind of create this flexible stable coin which is elastic, and elastic stable coins kind of have a unique place in the DeFi ecosystem, and by being elastic, they also kind of are very like lucrative for investors who want to invest in them, because the rebasing can definitely favor people who want to invest in projects like Benchmark Protocol, right? So again, that's a very interesting thing to know. So again, pretty decent website, and they also have insurance coverage from Nexus Mutual, which is a very cool project as well, which we will cover in our channel soon. So again, very high quality project with important information presented in bite-sized pieces. You can also go to the top right page in order to see the dashboard, the impact, about, as well as the roadmap. You can also see some FAQs, learn more about the team itself, and also find their socials on the bottom, right? If you want to follow their team. So I just want to quickly show you the dashboard for the Benchmark Protocol. Again, if you have, if you are connected with either Ethereum or Binance Smart Chain, you can basically kind of like connect your wallet usually MetaMask or Trust Wallet to Benchmark Protocol to kind of see the current information about the project. And again, this project, as I mentioned before, is both available on Ethereum blockchain as well as Binance Smart Chain blockchain. So please bear that in mind. And if you see the rebalance window countdown, if you click on the I button, you can clearly see that the estimated time remaining until the next active rebase window of the MARK token. Rebalances occur during a 5-hour window every day starting at 4:15 p.m. EST. So again, the rebasing time is basically 5 hours. So 5 hours is basically like the time when the token price would be assessed by the protocol, and the algorithm kind of like sees whether within the 5-hour period whether the price of the token is above or below or exactly equal to the the SDR rate. And depending on where the price is with respect to the SDR, there may be a rebase session, and that happens every 5 hours, right? Rebalances occur at a random time during this window, which means if a MARK token price diverges from a target price, the protocol will rebalance and expand or contract supply. Again, within the 5-hour window, rebases can occur at a random time. So it's not really a predictable rebase mechanism, which is it is an unpredictable rebase mechanism. So please bear that in mind. Which means unlike other unlike other elastic stablecoin projects, people really can't misuse the rebasing feature, because the rebasing time is at random within the 5-hour period. Nobody really can take advantage of the system, which makes it in a little bit more confident system to invest in, right? If you are again interested in investing in this project in the first place. So MARK Oracle rate, which is basically the price point of, I believe it's the average price point of this token within the 5-hour period, right? So the MARK Oracle rate is the time weighted average price pulled hourly over a 24-hour period in order to calculate supply rebalancing. So again, this is the average price of the token within the 5-hour period, and if you see, it's $1.60. The target price is basically, if you see the STR peg price is basically $1.42, and since the token price is above the STR peg, then there's a positive rebase, which means more MARK tokens are issued, and that kind of like increases the supply, thereby with an attempt to bring the price back down to the $1.42 range, right? If you see, the MARK price is basically the MARK token price volume weighed average across exchanges, updated every 15 minutes. So again, this is the current price, that's the average price, and this is the current price. The current price is again still above the SDR peg, and if you see the SDR peg, the latest price target for the MARK token based on the global STR basket as of Q3 of 2020, adjusted for inflation. The STR consists of 5 different currencies: USD, Euro, Chinese Yuan, Japanese Yen, as well as Great British Pounds. Again, something that we already discussed before. The market cap is $47.6 million in market cap, and I think the other one is basically the fully diluted market cap. Supply is currently 30.71 million tokens, but again, the supply for any rebasing token doesn't really matter because it's an elastic supply. Since it has a rebasing event every 5 hours, you kind of like you're kind of not really going to be using this information, the supply information, for any reason, because the supply constantly increases or decreases or kind of fluctuates every single time, right? So again, the market cap is the major number here and not the supply, right? So again, I just want to show you guys some of the key information on the dashboard to give you guys a bit more understanding, but I highly recommend you guys to do your own research, as this is a very interesting project which has a very high potential to be the future stable coin of the DeFi ecosystem, right? So let's go back to the CoinGecko page for benchmark protocol. Again, this token is currently ranked 627th by CoinGecko based on market cap, and it's currently trading at $1.53, basically what we saw from their website, like 2 cents off from their website, and it's clearly above the SDR price rate, which means it's going to have a positive rebase. Again, depending on when you're watching this video, this this price point may not be the same. So we are currently in the positive rebase cycle based on what the price point that we have right now, and the price actually decreased 5.9% in the past 24 hours, right? Again, if you take the market cap, it's still $41 billion in market cap, which is still considered as a low market cap token. Any token that's less than $100 million in market cap has an incredibly high potential to explode. And again, the unique nature of this token is if this token gets to a very high market cap, it's going to definitely garner a lot of attention, which will kind of make this token price be outside of its peg in the positive range, thereby triggering more positive rebases, which makes people kind of like exponential increase their wealth in a very short period of time, right? So those are some of the advantages of rebase token. Some of the disadvantages again are basically due to the negative rebasing structure. If you are not really comfortable, then again this is something that you shouldn't really invest in, because if you don't understand the rebasing mechanisms, you're definitely going to be not only confused, but you'll also risk losing a lot of money, right? So again, please bear that in mind. But when it comes to the market cap, I do believe that there's a huge potential for this token to have at least $100 million in market cap by the end of a few months. And since the alt season is going to start very soon, every token, including the low market cap tokens like benchmark protocol, will start pumping, and that will result in huge gains, right? So again, when it comes to that perspective, I think the market cap is still extremely low. Again, max supply and circulating supply don't really matter, because again, since it's an elastic supply token, the max supply and circulating supply are basically just informational, again just for information. It doesn't really help with the analysis, but as of now the max supply is going to be 97 million tokens, but the current circulating supply is going to be 26.6 million tokens. Again, obviously it fluctuates due to the rebasing schedule, right? If you take the charts, for example, this token has had higher highs and higher lows, which is a very interesting phenomenon. If you take the token price, it was available since 24th of November in CoinGecko, when it was trading, when its market cap was about $243 million. It's again, I kind of misspoke. It was not the price, it's basically the market cap that matters. The chart kind of shows the market cap having higher highs and higher lows, and if you see, the market cap kind of shot from $2.7 million all the way till kind of like $28 million within a span of a few hours, again within a span of 24 hours I should say, and then the market cap kind of declined. It's been kind of volatile. And before, if you see, after 2nd of March, it had a huge crash going back to $2.2 million all the way from $30.4 million, which was at its all-time highs, and then it kind of suddenly recovered, and then now it's being on a downtrend, right? So again, it is still a volatile kind of cryptocurrency, so I do expect this token to kind of like fluctuate up and down when it comes to the market cap, but I do think that overall the trend for the market cap has been going up, and it's not going to stop anytime soon, as more and more people are starting to realize the full potential of rebasing cryptocurrencies, right? If you take the markets where it's available, you can obviously get it from Uniswap and Balancer, basically through Ethereum, USDC and Ethereum respectively. You can also get this token on PancakeSwap, which is basically available as a syrup pool, and you can basically stake cake tokens and earn X mark tokens on Binance Smart Chain. And since it's available on Binance Smart Chain, you will pay very low fees when you buy it from PancakeSwap, or you could even passively earn it if you have some cake tokens in the syrup pool, right? That will be a much more cost-effective option rather than buying it from Uniswap or Balancer, because the Ethereum gas fees is obviously very high, right? And if you see the overall, if you see the overall price comparison, again, if you go to the top, again, it's been pretty much in the ups and downs. Its price point has been kind of like stabilizing after the February 18th or mid of February range, where the price has been going from anywhere between $1.37 to $2, and then coming back down, going up, and been bouncing around, moving sideways, which is showing that this token price point is more and more stabilizing towards the SDR rate rather than deviating from it, right? Which is also a good sign, because as this token starts stabilizing algorithmically, I do believe that this token may be used in several DeFi applications pretty soon, which will be a really good thing, because the DeFi ecosystem needs their own stablecoin rather than relying on a US dollar pegged stablecoin, or a stablecoin that's basically created from thin air, right? So projects like Benchmark Protocol will ensure that the DeFi ecosystem has its own place with its own stablecoin, which is completely determined by the algorithm and free from any form of like money printing from a human source, but rather an organic, elastic supply that contracts and increases supply based on mathematical means with no interference from any humans, right? And that's something that we need in the future. So based on that, I believe that this project has incredibly high potential to successfully be a part of the DeFi ecosystem. And while it may not necessarily be a good investment for everyone, it may definitely be a good investment for people who want to take advantage of its volatility to make some really decent gains in the short term, right? So with that regard, I think this project is something that I would personally invest in. I haven't really invested in it yet, because again, I'm really trying to make sure that I get into an entry point that makes sense to me personally, and I don't really get into this token at a high point where when it goes back down, I would suffer from negative rebases, right? So please bear that in mind. And again, if you feel like this project is a good project to invest in, please do your own research first, and then by all means go ahead and research and by all means go ahead and invest in this project, because this video does not contain financial advice. I'm not a financial advisor, right? Again, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.